Good morning, everyone. This is just a quick note to say that last night, after building the two growth portfolios and then the low risk portfolio, it made sense to me to do a medium risk portfolio, and I think we'll cap it there. This one is, realistically probably more medium high risk. It's not exactly a medium risk as per the note there. It's quite subjective. That being said, it does have some fixed income built into it, about 24% or so. And what I did last night, the other thing that sort of prompted me last night was two holdings in our growth portfolios had some really significant drops. Confluent is actually down about 48% right now, I believe, and it was last night. As well. Let me check here. It was down 33 last night, so it's actually down further. Now it's trading in. It's had a 14 handle at one point today. So what I did here is last night when these things dropped, I sort of marked the after hours price and said, okay, I would be a buyer after hours on Confluent and SolarEdge, which was down 19%. So that's what those two yellow boxes are here. So these ones I bought essentially after hours, after their earnings, which were not too looked upon too favorably by the market. But those are opportunities for me. I love those opportunities, right? When Confluent's down 33%, I mean it's down 48 now or something, but regardless, a 33% discount I'm happy with. So I've marked 1875 on that one. And then I've marked 61.34 for SolarEdge after hours. And then everything else, I just decided I would just buy on the open. I'm not particularly price sensitive. Again, this is a macro play, really. It's a macro play with a diversified portfolio, heavily leaning towards, even in this instance with the medium portfolio, technology, still solar, as you can see. The numbers are already looking good because it's actually it's been quite a positive morning for the market thus far. So anyway, it's too bad I didn't start this yesterday with the other portfolio. The numbers would be better because everything gapped up this morning anyway. But that's fine. So we'll start this one here, and as you can see, there's the portfolio. There's the two after-hour purchases. As I say, Confluent's at 14 right now, so I almost wish I bought that on the open, but being true to my word here, I screenshotted them last night, and that's that. But everything else, as I say, will be marked at the open. I'll have to go through and grab the opening prices for absolutely everything here. As I say, they did gap up. A lot of things gapped up, so we won't be benefiting from today's gap up. Not very much anyway. So this is the portfolio. We'll track this one and manage this one just like the others. This one I think will be a little less active. And then the other thing I had scheduled to do this morning, I've been actually busy with my real stuff, but I was going to already on the growth portfolio and the levered portfolio, I was going to sell just a little bit of Datadog and him and hers because they hadn't really changed much. It's been a whopping day, and I was going to roll some of that into Confluent down here. So I'll still do that. Let's just say I'll do that right now at the current prices. So I'll sell Dog, I'll sell Hims, and I'll do the Confluent trade. I've got to work out the shares and everything, but I'll do that right now for the growth portfolio because I just want to take advantage of Confluent being down as much as it is. This should be 1.5. Or actually, it'll be whatever it works out to be, which will be closer to 2% with the 30% weight increase. So the low risk is, I'm not sure if this is updating. No, it is updating for sure because that was only 1800 yesterday. So low risk is doing quite well as well. Growth, I assume this is all updating. Yeah, it is. Yeah. So I haven't even looked at this. This will be interesting. So this is all the updates from today's gap up. Confluent, you'll see though, is down 43% from yesterday. So again, this is where you got to be comfortable with the volatility, right? Day one, and we're down 43% on Confluent. It's almost comical. I love Confluent though, so I'm not, as I say, I'm gonna roll in some. We'll do it at this price. Can we do it at this price? 1587, sure. So I'll mark that right now. And how am I gonna do this? Well, you can see it. I've noted that. And what was the other one I was gonna do? Confluent. I guess I was just gonna sell him and hers, and I was gonna sell. What's the other one? Datadog. There it is. I don't even know what they're doing. Up 2%, and what is him and hers is up. Oh no, sorry, this is overall. Anyway, they're up a little bit. So we'll sell them, take a tiny profit, roll them into this at this price. Again, I'm busy with my real stuff this morning, but that's what I'd kind of marked out for today on this one. And so yeah, day 2 we're up 26 grand. So we've gone from 400 to 426, not bad. And then the levered portfolio, of course, will be better. Up 34 in total, with the various P&Ls there, 520 up to 554. This is a bit lucky, lucky timing for sure, right? I mean, as I said in the initial video, I do think the Fed is likely to come out a little bit more dovish, whether it's inadvertent or not. I think it was inadvertent in that they were trying to jawbone the market, as I mentioned yesterday, and doesn't seem to be working, right? So, and you see that in particular with fixed income here. I mean, for fixed income to be up this much, look at this. Yeah, TLT's up 2.35% from when we bought it yesterday, and the yield is like 3 point something. So we're getting like 2/3 of a year's worth of return in 2 days just based on price movement alone. Not taking into account dividends, and it's dividends because it's an ETF, and we'll get into that right now. But anyway, point is, wanted to set up the medium portfolio, so I did all this work last night, got all the weights right and everything, and then did those 2 initial after hours purchases. This is actually 1587. Yeah, it was 14 something this morning, so we're actually down a bit on that, but that's fine. Cash, I'm going to use IB. It's got an 18% weight to treasuries, which won't actually be up this much because we're going to mark it at the open, whatever that was, along with everything else here. So yeah, I'll do that work. I'll actually, in the same video here, I'll just show those prices just so we have all the average costs for everything recorded. Average cost hasn't changed for anything else, obviously, though I will be selling. It's actually not all of Datadog. If you look at what I put in last night, it was sell 25 shares and sell 690 shares of HIMS. So, and this is for the unlevered. I have to do the math for the other one, but essentially we're selling a portion of this. We're selling half of Datadog, and then we're rolling it all into Confluent at that price right there. So, yeah. Okay, so that's that. Those are the growth portfolios. There's the medium risk portfolio now set up and off to the races. No leverage in this one. It's a medium risk portfolio with a fixed amount. Initially, more or less 75% equity, 25% fixed income. And yeah. So this is exciting. I've got to fix up my numbers here clearly because it's made things a bit wonky for some reason, but I will sort that out. Okay, so just in a moment here, I will have the updated average costs, which we can take a look at, and then. Now updated everything to reflect what we discussed earlier, which was that we would use the opening price of today, and other than the 2 of them that we, where'd they go? Yeah, 2 of them that are highlighted here, which we purchased last night in after hours, trying to capitalize on those declines. Really, it doesn't actually matter because this one opened a lot lower. It opened at like $15, and it's a larger position than this one, and this one I think opened down a few percent or something. So we benefited on one, on the other we actually lost, and I think net it's probably a slight negative having bought in the after hours because of the current price of Confluent. So doesn't really matter, but anyway, there's again, that's what we did, so that's what I'm showing. Now, the unfortunate part about this is that, we set this up last night. I even did the weights based on the closing prices. And if we look at something like Camping World, for example, Camping World was $17 last night. And I set it up to be a 3.2% position or thereabouts. Now the issue is that it gapped up this morning, I think up 25% or so to this opening price of 21.12. It actually closed the day down at 18. Now the issue is I wouldn't have wanted to do that big of a position after it just went up 25% on a news spike or an earnings spike. So this is a little bit unfair in that I wouldn't have bought that basically. But I don't know how else to keep it fair otherwise, because I'm doing the same thing with everything else, just buying, pretty much randomly on the open. So I guess we're just going to have to live with having massively overpaid. They're at plus 25% versus yesterday. And you can actually see that because I think we own it over on the other side here. And this is the growth portfolio. Yeah, you can see our cost basis is 1701. Up 9.3%. Instead, over on the medium risk portfolio that we just started this morning, we're actually down 11%. Right off the bat with quite a heavy weight, especially since this is a portfolio that doesn't have really outsized weights, other than an ETF. So I'm just going to say that's unfortunate. Too bad for me, I guess. Massively overpaid and down 1,700 right off the bat. Everything else, the numbers you might have seen earlier were actually yesterday's close. So a lot of these numbers were like, well, in fact, Palantir was up 20-something%. So we actually had a plus 20% P&L here, day one. But that was, again, based off of yesterday's close, which is not exactly what I was doing because I set this up, yesterday. But in order to make it real, we would have had to buy on the open. So I've put in the open price, so we're up 2.6% instead of up 20-some-odd% versus where I was, actually setting this up last night. Regardless, I clearly didn't love it anyway. In that I think it's pretty rich to start with. I'd like to buy it, but I'd like to buy it lower. After the 20% move, doesn't look like we're going to be buying it anytime soon, but who knows? If it's anything like Confluent, maybe we'll get an opportunity. So anything else here to note? Yeah, so Camping World, that was unfortunate. A big gap up, and a lot of things gapped up, right? So like a lot of these numbers actually aren't great. Mobileye, it might have been up 5%, but we're only up 0.98, and some things we're actually down on, even though it was a really good day. Tigo, we're down 7% today, 8%, and some big losers here for sure. With Confluent actually being the largest loser because again we bought in the after hours and it opened, I think it's a 14 handle as I said earlier. And then yeah, a lot of these gapped up on the open and we were buyers at higher levels, and then they spent the day declining in some cases. So anyway, not a massively fruitful day, despite it being a very fruitful day over on the growth side, having held overnight and captured that gain or the gap up. Like, I mean, Schrodinger, look at this, up 16%, and this is like a day and a half, right? SunPower 14.6 in a day and a half. Anyway, point being, the medium growth portfolio is starting off at a bit of a disadvantage, to say the least. In same thing with the positions that I have high weights on the other things. We're starting at significantly higher average prices than we did yesterday, even on the growth portfolio. But anyway, that's life, right? You can't buy everything at the lows, and this may not be the low anyway. I mean, chances are it's not, and that's part of investing. So we should be very comfortable seeing some red numbers here, certainly after day one. So let's count ourselves as fortunate actually being up on day one, even though it's maybe a bit of a a sour win, if you will. The other thing I'll mention here is this one I did today as well. So this is kind of an interesting thing I've done here on the medium risk portfolio. I've done some leaps. So these are January 2026 Enphase $75 call options. So Enphase today is $78, and we're purchasing the right, or buying the right to buy 4 contracts at $75. For each contract represents 100 shares. So hence the book value of $13,000 here, because it's 400 times $33 yeah, 400. 4 times 100 times $33, which is what we paid. And what we paid, just for the record on how I came up with that, I took a screenshot, midday here as things were happening. Does it have a time? It doesn't have a time, but it was midday. And the 75s, the last trade was 33.08. The bid was 31.70 and the ask was 33.10. So essentially we paid the ask. I could have just used the ask. I mean, it's no different really. It would have been generous to myself had I picked a midpoint. And frankly, it may well have executed at a midpoint had I put an order in there, but we don't know for sure. So I'm essentially just going with the ask. And yeah, unfortunately, the plan there was that, just a little bit of background, SolarEdge had sold off, 19% after hours. And after hours, that had pulled Enphase down about 6% as well after hours. So I was thinking that these might actually open around like $29 or something. But at the end of the day, Enphase was actually up, I think, 4% or something. So it didn't give us sort of the opportunity I was hoping for, unfortunately. But I'd already set this up, and 33 is fine. I'm okay with that for sure. They're long dated calls. They actually have some intrinsic value day one. We're paying $33 for them. We're really paying for the time value, the option to buy at $75 in a number of years, almost, a little over 2 years out. And today it's already $79. So intrinsic value is $4 here because we have the option to buy at 75. It's currently at 79. We're paying 33 today. And the reason we're paying 33 is that we think this is going to be, let's say, $150 in the future. And then the value of this is not 33, it's on expiry date, it's actually going to be $150 minus the 75 that we've agreed or have the option to buy at. So the profit, or the difference, is going to be $75. So this will be not 33, but 75 if Enphase is $150 in a couple years. I think that's very realistic and very reasonable, and I certainly think it'll be above 75, so they'll have some intrinsic value, and hopefully they have a lot of intrinsic value. Ideally above 33. And I actually, have a fairly significant weight there. Again, I was hoping to get them a bit cheaper, but, it is what it is. So what we'll do is we'll have to manually adjust the market value on that. Every now and then I'll check the options chain, and we'll pick probably a midpoint going forward, not the ask, although that would be generous. We'll pick a midpoint probably and update that accordingly. Anything else to note here? Some sort of low quality companies, but small weights. So technology, generally, smaller weights as well, although adding up to 15% of the portfolio. Confluent obviously being a bigger weight now after the big drop. And then treasuries, we didn't get the benefit of the big move today. It was like another 2% day or something in treasuries, because we bought at the open. Basically, the move had happened already. And so we don't have much of a profit there yet, unfortunately. The low-risk portfolio certainly does, though. The low-risk portfolio, which we got into yesterday, has some nice average costs and some profits already starting to accrue. So, yeah. So I think that's everything for now. That portfolio is now set up and ready to run. Hopefully I won't have to make too many trades in it. And, I'll set up a blotter later as well for this. As needed, but this is sort of the portfolio for now. Yeah, we'll leave it here and start to track it going forward as well. Okay, and the last thing we're going to do here today is a little bit of housekeeping. This isn't going to be the most exciting portion, but it's definitely informative and interesting if you're not sure how to do these types of transaction calculations. So I'm just going to run through the math of how I do the blotter for the trades that we discussed earlier, which were selling, if you recall, it's selling him and hers, or a portion of it, selling half of Datadog, and then using the proceeds to buy Confluent after the decline. So I'm just going to run through that math. We'll come up with the new average costs, and yeah, just ensure we're all on the same page on what happened there, and execute those trades based on what was discussed earlier, real time. Okay. So as per the previous video, we talked about doing a trade. The trade was, we marked the prices in the last video, or the last section of the video. The trade was selling HIMS, or part of HIMS, selling part of Dog, or Datadog, and buying Confluent with the remainder. We're going to run this with basically no cash for the growth portfolios. So whatever the proceeds are, we'll roll into the new purchase, and likely continue to do that with other trades in the future as well. So this is a little trade blotter I've put together. I'll have to, be a running trade blotter. I'll keep track of all the trades, the number of units, the trade price. Then again, these prices were marked in the last video, or last section. They're a little different than what we have currently, because Confluent ended at 16.28. Datadog ended at 79.24, but we actually sold at 82 earlier this morning at 7 a.m. Pacific when the video was recorded earlier. So worked out the new numbers. The new average price for Confluent is now $20.97. So previously it was $28. We bought yesterday at $28, and it went down 40 some odd percent or more at its worst levels. And then what we did is we took the proceeds from those two sales that we talked about, and then bought at $15.87 with the amount available, or close to it, leaving a whopping $1.20 in cash. So that resulted in lowering the average price from $28 down to about $21 now. Current price is $16, so we're still out $3,200 on that trade. Or that position, I should say, but we've lowered our average cost. I like Confluent, and I like it at these prices especially. So happy to raise it to a higher weight, and reduce something else to make that happen. So we reduced Datadog down to 0.5% from about 1% before, and him and hers was a bit more as well. It was 20%. We took 20% off of the previous weight. So this was 3,500 or so, and now it's 2,750. So over on the leverage side, I'll run through the math on this one. Haven't 100% done it yet, but we'll kind of do it together here quickly. So if we scroll down here, we've got 20% of the position of him and hers is 44.75. So to keep things in sync, because that's what we're doing, right? We're more or less doing the exact same thing on the leverage side. In the same ratios. So we sold 20% of him and hers over here on the unlevered side. So over on the levered side, we'll also sell 20%. So that works out to 898 shares. So we can now reduce this amount from 44.75 down to 35.77 when you net off the 989 or 898, I should say. And then on Datadog, we need to reduce this. Unfortunately, we cut the other one in half by, we went from 50 shares down to 25. Can't split this evenly, so it's, of course, 32.5, so we're rounding to the nearest integer. So I went with 30, selling 33, remaining 32. And so there's the 33 sold, rounding up from 0.5 from 32.5 to 33. The trade price was 82 as per the previous same trade prices we talked about in the live video. There's your commission. So here what we're doing is we're doing the 33 shares we're selling times 82 minus the $2, which comes off of our net proceeds. So cash raised is the sum of those two trades, and then there's our cash balance plus the $55 we had previously, just as a residual. And so Now we need to add our Confluent purchase, which I actually don't know the number, so let's find out. So we have this much cash. We know we're buying at 1587, so we'll just go take our cash balance, divide by that. We get 518.9. Now over here, we actually can't go to the nearest integer because we would run out of cash. We'd be in the negative. So we actually have to round down on this one. So it's going to be 518. And so that gives us a difference here. So here, our cash was 8234. And the cost of this, including the $2, actually these should be 2.5. Let me adjust that because these were 2.5 everywhere else. I'm sorry. So anywhere that we're employing a commission, oh sorry, it's right here, 2.5. These should be 2.5. Sorry. Okay. So then that can actually come out of this calculation, or at least it's a number from here. So the cost is 518 times that plus the 250 gives us that. And our previous cost was 10,390 at 28, and that only gave us 371 shares. So now we actually have quite a few more shares than before. So the math here is that we add up the cost basis from the two different trades that we've now done, and we divide by the total number of shares we have. So 518 plus 371, and we get 2094, which is close to what we have over here, 2097 as an average cost. And we have a whopping $10 left over. So what we'll do is we'll put this average cost in 2094 instead of the 28 that we had previously. So 2094. And we need to adjust our share count to reflect the new number of shares, which is the sum of these two guys right there. So 889 is what we now own of Confluent. 889, and it's an $18,000 position worth 14,000. So we're out $4,000 because we bought half of it at 28. Then we bought, or we'll call it half anyway. And then we bought some more at a lower price. So anyway, we're out a bit as expected, but our average cost has been lowered. It's now a fairly significant weight though, so that's worth noting. And it's actually, it's 261 over here. That seems like a big difference actually. Running off the market value, running off the we're not running off the market value, that's what's going on. Sorry, I'll have to fix this. I'll just fix this one right now, but then I have to fix everything because that's clearly wrong. Yeah, so it's 362, so we're 3.62%. Yeah, that should be off the market value. Come on, get your weights right, get your weights right. Anyway, I'll fix these later, and it'll work out to these same numbers. So, so we have a new cost basis, we have a new number of shares, we've reduced this one down to 32, Datadog. We have reduced him and hers down to 3577 as per the 20% sell, which was the 898 shares. So here we sit with $10.81 cash, so we can update that. 81 cents cash, and that should not be in there. Sorry, that's a profit column. That's just cash, and that adds up there. Perfect. Okay, good. And same thing as on this side, our total cost basis is no longer 400,000 because we've realized a little bit of a gain and rolled that into a new purchase. Same thing over here. We've realized, whopping $300 of gains by selling those two things after a day, and then rolling them into the new cost basis in Confluent right here. So yeah, there we go. I'll clean this up just a little bit more and make sure everything's good, and then we have a trade blotter for the levered side and for the unlevered side, and we've adjusted based on that move in Confluent. Now, I think as I maybe mentioned earlier, we're not going to be doing a whole pile of trades every day, but when something like that happens, when Confluent drops by 45% or so, it's worth acting on, and so that's what we've done here, and we did it live, which is good, or at least peg the numbers live. So I will leave this for now, and we'll see you in the next video.